Hi, it's Dan Genzel, and I just had a thought. I wanted to record a video for you and talk about I came up with 9 reasons to put group investments together, or what I call become a syndicator. And this isn't really scripted. This is no particular order, because I want to demonstrate to you that now is the time to start raising capital from private investors to put more deals together. I think we're in the 6th inning of this ball game, and we could go in some extra innings because of some macro things that happen in our economy. So again, in no particular order, you can get involved in putting these group investments together with very little of your own risk. I used to think when I was investing in real estate, I had to put all this capital into the deals and I had to drain my personal money, and that's just not the case anymore, because there is so much capital out there that wants a home in real estate that it's not that hard to raise money. And so that means you have to put very little of your own capital. I always put my own money into deals, but so I think there's little of your own risk into the deals. And also too, my recent deals, I haven't had to sign personal guarantees, so there's no guarantees on those. And I think another reason to get into this, when I first got into syndicating real estate, I was a commercial real estate broker, and I could start this business part-time, and I ran a wealth creation business by investing into my own deals and my real estate brokerage business, parallel paths. So you can start this business essentially part-time. And one of my students, Tracy McGuire, did the same thing, and he was doing fix and flips, and he decided to get into raising capital and putting commercial deals together, his first deal was an apartment building, and he earned a $55,000 fee, front-end acquisition fee, in his first deal. Not too bad for a part-time job. Third reason is when you're syndicating real estate, there are multiple other profit centers for you. Like I mentioned with Tracy, you can charge front-end acquisition fees, which could be anywhere from 1% to 3% of the purchase price of the property. I routinely do that, and sometimes that's where I generate this quote-unquote skin that I put into the deal. So in actuality, I'm not coming out of pocket really anything. Second is I earn ongoing asset management fees to manage the partnerships, and that's paid monthly, and it's really to manage the LLC that owns the property, coordinate with the property manager, work with the accountant, any legal issues that come up, or anything like that, and you're really managing the assets. Different with the property manager, so you're the asset manager. And I think third is, and I don't usually do this, but some people charge disposition fees. So a percentage of the selling price goes to the syndicator. But then also for the syndicator, because of your promote, the amount that you own of the deal, you're going to receive a nice back-end appreciation. So those are a few different profit centers. I don't think this is a really big reason, but I just put it on the list anyways. Those real estate investors have the best gig in town as far as tax benefits. I'm not an accountant and I'm not a CPA, so do not take my advice, seek your own. But personally speaking, for me, I can offset a lot of my income from the losses that my real estate generates, and that's due to a great thing called depreciation. So, and I get obviously I get lots of write-offs from my real estate business. So again, that's a reason you're going to want to do your own investigation to figure that out, but that is a good advantage. And I think, personally speaking, again, I'm not a CPA or an attorney or an accountant, but I do invest in these properties, my shares, oftentimes through a solo 401k. So you can essentially design your own retirement plan using real estate and self-direct your money, and that money grows on a real tax-advantaged basis. So you can start building your retirement using real estate instead of relying upon the stock markets. Next, I think it's easier to raise money for syndications when you're raising, $25,000, $50,000, $100,000 at a crack per unit from high net worth investors, because they can invest a lesser amount per deal than if they were to go buy the property themselves and plunk down $1 million or $2 million bucks. So they can go into a few different deals, and that happens with me all the time, where I have investors that put money in this deal and put money into that deal. So it allows them to diversify themselves into a bunch of different deals, and obviously you're pooling all of these investors together. And that's really the value that you bring to the table, and why you get paid well to be a syndicator. So if you need to raise $250,000 for $1 million deal, which is 25% down, think about how easy it probably is to raise, $10,000 from 25 people. I mean, I think everybody knows 25 people that would be interested in investing in the right deal, and your job is to go find them. So and keep in mind, people are starving for yield, so they're looking for a good, reasonable return on investment. I think it's easier to buy deals using certain strategies when you syndicate real estate. Like, one of my favorite things right now is land. So what I have done is I have done a direct mail campaign, and I'm looking to joint venture with landowners. And I'm not going to get into really what that means, but essentially I find landowners that have land that's in the path of development, and I sell them over a marketing campaign to potentially contribute their land into a new partnership that I manage, and I entitle that land, I get it to its highest and best use, bump the value, and then we go about parceling off that land to other developers. So it's a really good strategy that might not be so good if you were just to pay all cash for land. So once you partner up with other strategic partners, those strategies work really well. So I think you're able to get deals that are less appealing to mainstream investors, because you're able to buy them so far below intrinsic value that I think if you were to go out and find value add deals, and that's really what I specialize in. There's a lot of investors out there that don't want to touch properties that are kind of screwed up and it requires a business plan to implement. And see, I love doing that. The more screwed up the deal, the better, because I know I can buy it cheap and add a ton of value and really bump up the price and create equity. So it takes a special kind of investor to do that, and I don't think most mainstream investors want to do that, want to take that risk, and want to work that hard, frankly. So I think syndications lend themselves really well to value add deals, and that's how I can pay nice yields to my investors. So that's my list. Sorry to ramble on, but I just kind of thought I'm gonna create a video for you guys and just kind of shoot from the hip and tell you the reasons why I think it's great to syndicate real estate, and to urge you to start looking at implementing this strategy in your real estate investing business. Okay, take care.